Guys, Mike here. So another nice green day in the market. Not sure if you were watching, but one thing we're going to talk about is volume for sure today, which was absolutely pathetic. But we'll talk about why. And there's really two big reasons I believe this happened. Also, a reason why you see people buying puts right now, or quite a few people. And I'll show you those sweeps that came in. But I'll show you exactly why they're doing this. Okay, it actually has a rhyme and reason, I guess you could say, to it, and it'll make sense once I show it to you. Also, we'll go over UNH, which had good news. Also, Hood had good news. We'll go over that chart, as well as watch out for IWM here. But I do want to start off with this right here, if you don't mind. Anytime I talk about AI, I like talking about AI, and I thought this was interesting because some of this is misplaced, but some of it's not. And it says local opposition is growing, and they are voting down data centers. This was actually true. I've been keeping up with headlines. I usually talk about this in Saturday's video, just to not muck up the weekday video updates and stuff. But this is actually true. A lot more opposition coming up, and one reason we talk about in just a second why. But this one made me laugh. Negative sentiment is so bad. The only two worst things as far as approval ratings are concerned below that AI is Democratic Party and Iran. I mean, that's it on this survey they showed and stuff. So I thought that was kind of hilarious. But if you look at what's happening and why people really hate it more than anything, it's got to do with the electricity bills from the data centers, right? Because that's getting mainstream now. They're talking about it. But I think this gets a bad rep. And again, in Saturday videos, I've shown this. I've shown many interviews and all kinds of different stuff showing, yes, in those areas, the electricity bills absolutely going up. But look, in my area, the electricity bills have been going up, and we have 0 data centers around here, okay? So they're going up around the country. Just in those areas, I think they're obviously shown they're going up much more, and they're literally, they can say, yes, it's because of the data centers, right? I mean, we were fine till they came in. Let me know how it is in your area and stuff, but I just found those numbers interesting because they really do line up with what we've been talking about in Saturday's video. But and this is reason why you're seeing the federal government really try to ramp up and say, hey, we need to get legislation passed to take away states and local rights to try to fight back on this thing, okay? And so, again, we got different opinions. I know I got my opinion, you got your opinion, but that's the great thing about America. We all have different opinions, and I respect that. Now, what we talked about coming in April was what? It's the third best month of the year normally, okay, seasonality-wise. We're going to see if that's going to continue. So far, that has been the case. That does not mean we can't go down and sell off, okay? But again, this is why you see, like, no matter what's going on heading into July or November, a lot of times you get bounces, and we just had to be oversold coming in these months, and that's what happened. The one thing that does not get enough headlines to me, and this is another thing that blows my mind of how well this market's held up, is the Japanese yields, right? The 10-year, their 30-year. Again, it's not near ours. Their 10-year is 2.38. But remember, they were in like negative rates for the longest time. And our hedge funds were borrowing money, at 0 rates and then plowing it back into our stock market. And ours is 4.4, I believe, right now. But the big scare, but of course, the big two things are, well, hedge funds probably aren't borrowing money from there anymore. They're definitely doing it at 0 rates anymore. But also, if the Japanese people who put a lot of money in our stock market say, well, I'll just go ahead and stay home if their yields keep climbing and just start buying their treasuries versus buying ours, which we know they've been decreasing their buys, whatever. But that's really the big thing we got to watch play out to see, like, how high are their yields actually going to go. Like, that is going to be key, and nobody really talks about it anymore. But I looked at it the other day, and I was like, wow, things are getting up there. They've moved up quite a bit. So, we'll keep an eye on that. Now, talking about volume, like, this was around 155 right here when this happened. Look at that volume. I mean, that was terrible. And I thought, wow, I thought maybe my trading view was broken or something. But then I started looking it up, and like, nope, other people are talking about this. I was like, okay, so let's just see. Maybe we'll get a surge. And, one big reason for this, I think, because obviously President Trump was speaking at 1, and then there was something else I'll talk about in a minute. But I put a line on it. You can see these levels right here. Again, this was the end of the day. These are full day candles here. That was just till 2 p.m. We still had 2 hours left. You have to go back to like Christmas holidays, Thanksgiving holidays to actually see volume like really that low. Matter of fact, the SPY volume was the worst in over a year. And I'll show that one to you. That one was really sad. But when we go to the end of the day, you can see we had quite a good, nice surge. We doubled it in the last 2 hours on SPX after President Trump got done speaking. But when you go back, look at 2026 and look at where we're at. Ended. Lowest volume of the year. And then you got to go back to Christmas 2025 to say, oh, okay, that was, a little bit better volume. But again, that's Christmas holidays, right? And so that's the real problem there. I mean, so definitely not good volume, but I don't make that much of it for, two simple reasons I'm going to talk about in a second. But when you come over and look at SPY, this is the end of the day. Good Lord. that was yesterday. I mean, that is pathetic. That is below Christmas levels. I mean, the December 24th, the day before Christmas. Look at that. That was just sad. And of course, now understand, there were global exchanges that were closed on Monday today for Easter, okay, in observance of Easter. We closed ours on Friday. And so that was definitely one of what I believe three reasons, as you saw the SPX. The other one was President Trump spoke at 1. People weren't sure what he was going to talk about, so I think people were just holding off, and we kept staying in these tight ranges on the S&P. But he talked about the airmen coming home and how the rescue was and all that stuff. And, thank God they're home. Glad to see it. I really didn't talk about anything to do with Iran, and the volume picked up. But the other reason is the deadline's tomorrow, right? Are we going to get an extension? Are we going to bomb their electrical facilities? Is Iran, going to come to the table? Who knows? And so why even try to waste your breath or risk even trying to get involved when you don't know what's going to happen in the next 24 hours? And so, that's really the big thing. I think why you saw the volume like it is today. The other reason is, and you're going to see this, why people are shorter, and I'll show you, is where we ended the day on the S&P. And you saw millions worth of bearish bets coming in on gold, the S&P. And the reason why, I believe, is very simple. A couple reasons was the one I just told you, but the other one is where we end up on the chart. And you see a bunch of sweeps, right? So these are call sweeps, put sweeps, where they're selling calls, and I'm just looking at the April ones. Like some of these are very short dated, April 7th, April 17th. Those are very popular dates on these. And all of these I'm highlighting are just either selling calls or buying puts, okay? And it definitely is like millions of dollars worth of these things. And so it's just something to keep an eye on for more the short term. And then what I bet everybody's looking at is like one big oil spike. If this happens, right? These are, just gambles. These are hedges. These are people betting that maybe we're going to get a short-term volatility if things go through tomorrow or even the next 2 or 3 days. But one reason for this is because of where we ended. We ended at the 21-day moving average, okay? We already got rejected once from it. We hit it today. We got rejected from it. We held there. But it is what they call good risk reward. Clearly, you can see down beneath, whole lot of liquidity, big gap. I'll show you on like a 4-hour and stuff in just a second. And so there's all kinds of stuff down there. Again, if we break through, we'll move up to the 200. That's another reason they're probably doing it as well, is because you got the 200 right above, which still has not been retested. You can see that gap I was talking about right there. But again, either this is a low, that's the higher low, and we'll push through, or yeah, we're going to end up coming down. Doesn't mean we got to come down and break, the main low or anything like that. Doesn't mean that at all. Now, if we follow through and start blowing up all kinds of stuff in Iran and hit their oil sites and everything else, well, of course, if oil surges, we're going down. I think everybody would agree with that. And again, that 650 level is going to be really key to see if it holds as support. If we break through it, that will be resistance, okay? And so with the deadline being tomorrow, with us hitting the 21, which normally when you come up against an EMA like that, you'll get rejected. Plus, what are we doing about Tuesday, Wednesday? Monday's what? Been the most bullish day of the year. Still holding true, by the way. Still holding true. Okay, Thursdays, you have been the worst. And Tuesday, Wednesday, like a coin toss. You can just flip it up. Maybe we do, maybe we don't. And so that's why people are hedging now or even gambling, just saying, no, I think we're going to pull back from here. Great. And that's why you're seeing those sweeps come in as they are right now, and such being short dated. And I mean, you can look today. I mean, I drew these in pre-market. There's the pre-market right there. And they held all day pretty much. I mean, it was a 0.5% range up and down for many hours. And so we never broke out of it. And a big reason for that is oil, because every time oil dropped, it kept spiking back up. But one thing, watch that data wick right there at 659.72 on SPY. That was a 10 a.m. data wick that never got taken. And so I'm going to mark that out to see if we end up taking that either in pre-market, maybe tomorrow, but I definitely want to see that. We took the bottom of it. And for those who don't know about data wicks, you can look it up. I've made videos on it stuff, but usually you end up taking those. So again, I'll put this trend line here. If we do come down, we'll see if we break these and see if we start breaking these levels and stuff. And a lot of these actually accidentally, when I looked today, coincided with big dark pool levels as well. But with oil, you saw us come up here. I mean, boom, got rejected again. Came down nicely. Market rallied on that. Got this trend line we're still trying to hold on to. I just saw an after hours where we tried rallying up some, immediately sold off. But again, this is all headline driven, all that fun stuff. Still got to try to get below $100 again. That would be nice to push down. And of course, if things go to heck in a handbasket tomorrow, we're probably going to come up and we're going to take out this high right here at 115.51. And I almost would like to bet money if that would be the case. As soon as we take it out, we're going to see a nice drop down to what is that big resistance level around 114 right there, and then bounce from there if that is the case. But again, a lot of stuff has to happen to make that happen. IWM here, you can see sitting at this resistance level once again, and it is rejected 1, 2, 3, 4, 5 times. 100 moving average is also there as well. So, you know, it's like a pressure cooker, right? If the market goes, this pushes through, then we'll come up right there and hit that 258.04 again. If not, then we're going to come back down where these two imbalances are at 245 to 247 right there and see if that holds as support. Again, you need risk on to see this one go. But, you know, right now it's up against the pressure point there. Looking at Hood, good news for Hood today. Again, this is one of those ones that did test the tariff high back there, as you can see. Trying to break above this trend line right here. A lot of damage on this chart. This thing has been way down as crypto has gotten crushed. This is a weekly chart. So I'm looking at a weekly 8 and 21 EMA right here. But it did win along with the Bank of New York, I believe, the Trump accounts. And supposedly there's like 4 million already. So, you know, that's good for them. And so we're going to see if this can push up. But honestly, for this to happen, you can see that area right there. That's going to be your target, really, if this thing really started to move back up. It would be the 0.5 fib, you know, 21 weekly EMA right there. But you're going to have crypto turn in my book. I think that's just the way it's got to be. And let me get the other chart up here for you so you can see it. You know, this has just been hovering, keeps breaking down below that, breaking back up. And so if crypto does do what a lot of people want it to do, go to that 78 to 85 range, then Robinhood is going to go right along with it. UNH. Forget about that pullback I talked about. I talked about this one last week, which I'll mention in just a second, but had big news in after hours. You can see about 10%. All this has to do with the Medicare Advantage plans and what rate they're going to pay and all that fun stuff. So that was the big pop. We'll see what holds. It's going into the gap now. But yeah, it's amazing to me how when it flags out, it was literally pushing right up against that trend line right there all day long, and you're like, okay, cool, let's see what happens. And this is exactly what happened last time. It was the exact same formation. They put this news out, and this is the one I was showing you either on Wednesday or Thursday video about the volume leader Twitter account, where they were showing like it's going above the number 1, number 2, like most like volume areas and stuff. And then how I've been reading, like seeing like the last 3 or 4 weeks, congressmen who are on like the health and human resources committees or anything to do with healthcare were buying UNH. And now, of course, they're going to have that news before anybody else does. And this is one. So we'll see what holds and stuff, but that's what they were waiting on. I hadn't really read, put in the comments if you had. I don't know if all the investigations are over with this company or they're still waiting for the hammer to fall. I'm not even sure. I hadn't even paid attention to it. It's been so long. It's been going on for so long. But let me know if you have any data on that one. Now, tomorrow's data, you're looking at core durable goods, headline durable goods, and no earnings to worry about. Okay, so please hit that like and subscribe button on your way out. Appreciate you guys who watch. And my sign up for the membership, so everything you get with it, only $7.99 a month or $85 for the whole year. If you'd like to support the channel, just hit the first link down in the bottom description right below the video, and I'll see you tomorrow.